let me write down here. Any uncertain liability. So there are three criteria. Which are those three criteria? I will explain. Any uncertain liability which meets three criteria, you call them a provision. If there is an uncertain liability and it meets the three criteria, you call it a provision. And if you call it a provision, you recognize it. Recognize means that you take it to your books. Recognize means that you take it to the income statement and balance sheet. Now, what are those three criteria? Those three criteria are, now let me write down here, three criteria. So you've got three criteria. Number one is present obligation as a result of past events. What does that mean? It means that this is your obligation now. If I'm preparing my financial statements on 31st of December, it is already my obligation. It is my present obligation. Like when I'm preparing my financial statements on 31st of December, I already have given you the warranty. I put my signatures, I put my stamp. So it is my liability. It is my 31st December. It is my obligation to give you warranty. Criteria number two, probable outflow of economic benefit. Probable outflow of economic benefit means that the probable means more than 50%. There is more than 50% chance, there is more than 50% possibility that there will be an outflow of economic benefit. Outflow of economic benefit means that you will have to spend something. There will be some expense on your side. You know, money will go out from your business. So number three is reliable estimate is available. Reliable estimate is available. These are the three conditions. Any uncertain liability which will meet these three criteria, you will call it a provision and you will record it, recognize it into your income statement and balance sheet. I'm repeating again, the three criteria. Number one, it is your present obligation as a result of past event. Number two, probable. Probable means there is more than 50% chance that economic outflow will happen. If a customer brings in some mobile phone on warranty, you will not make money out of that. You will not earn money out of that. You will have to spend money on that to repair that mobile phone. And reliable estimate is available, which means that you can make a forecast how much it will be. You just cannot take some number from the air. Reliable estimate. For example, if Mehran and I, we work in the same company, and Mehran is, preparing financial statements on 31st of December. Mehran comes in and says that, sir, do we need to create a provision? Provision means kind of reserve. Do we need to create a provision for warranty? And I will say that, of course, we need to create provision. And I will ask you, Mehran, how many telephones we sold last year? So Mehran said that, sir, we sold 5,000 phones. And I ask him that based on our past experience, based on our historical data, usually how many telephones they come back in warranty? And he says that, sir, usually 3% come back on warranty. This is available from our historical data. This is our past experience. So I know that out of 5,000, 3%, which means 5,000 into 3%, 150 telephones are expected to come back. I'm not saying that definitely this many will come back, but approximately 150. 5,000 telephones we sold, but 150 telephones, they may come on average, based on estimate, they come for a repair. And then I ask him that how much is our average expense on each telephone? And he says that, sir, sometimes we spend $40, sometimes we spend $50, sometimes we spend $60. It depends. I say that, Mehran, on average, how much is expense? And he says that on average, it is approximately $50. So it means that $50 is our average expense on repairing a telephone. So I say, okay, now let's create a provision. A provision of 50 times 5, 150 times 5. 100. So we expect that 150 telephones will come in warranty. Each telephone will have a $50 expense. $50 expense. So our provision should be 7,500. And what we do here, that on 31st of December 2019, on 31st of December 2019, we say here credit provisions with 7,500. And so what I'm doing, that this warranty expense, this will go to income statement as your expense for the year, and this will remain in the balance sheet as your reserve, as your provision. So you immediately make this double entry and you recorded your expense. Remember that $2 we did not include when we sold one telephone, and we did not. So now you are probably selling, maybe you are selling your mobile phones. You sold 5,000 mobile phones. So let's suppose that one mobile phone is 5,000 multiplied by $300. So you are recording 1.5 million revenue. So you are recording 5,000 telephones into $300. So 1.5 million is your revenue. Here you will write down your cost of sales, whatever, and then you will also write down your warranty expense, which means that, in order to generate these sales, you must take into account that how much is the repair expenditure. So your cost of sale was here, for example, you should also subtract your warranty expense. So when you will make your 2019 income statement, you will show as your warranty expense. Now, this expense has not yet incurred. It has not happened yet, but you estimate that it will happen in future, but it belongs to the current period. Okay, so we said that we have many types of uncertain liability. If any uncertain liability, it meets three criteria, and these are the three criteria, we call it a provision. and we record it into our books. We recognize it, which means we take it to the income statement and we take it to the balance sheet. And how do you take it to income statement, balance sheet? By making a double entry. If any uncertain liability which does not meet the 3 criteria, which means anyone is missing, you call it a contingent liability. You call it a contingent liability and you just disclose it.